realtor, lender, lender, realtor, Dallas Fort Worth real estate.
But not the boring content.
Absolutely. I'm going to let you start this one.
All right. So as Elena has gone through some of the challenges in the market and some of this stuff, we can maybe talk about a bright side of what we're seeing right now. Still challenges, of course, but we have been seeing, at least on our side, a lot of what's called DSCR loans. And I had just saw through...
dive deeper into that.
Yeah, sorry. So DSCR loan is an investment loan.
Don't worry, guys. I'll keep them on track.
Yeah, there we go. Right, I just go.
Stands for nerds out.
Yeah. Debt service coverage ratio loan. So what this means, basically, it's a financial formula to where the property generates income to cover its own debt, basically. And so with these, a lot of these loans are used by investors that have several properties or business owners that necessarily don't pay themselves or claim as much as possible. It's a no income, no employment loan. Awesome. Pricing is phenomenal. And then, we've been seeing the last handful of months investors jumping into the market, which is really good sign for the future
Well, I will
market.
say the pricing is incredible, but also the program, as in it's smooth. Because most times when you have like a creative financing like that, it takes longer to get to closing. He's still closing in 3 to 4 weeks. So go ahead.
Yes. Yeah. They're great products. The only time you'll have sometimes a little bit of a slight change is after the appraisal, because it does come with rent comparables.
Yeah.
And that's what creates the DSCR ratio, right? So, you can, and the ratio dictates essentially the interest rate, loan to value as well. So a lot of it sits on the appraisal, but it's a great product. We're doing one right now, actually, and it's a great time for investors because they are getting deals on homes. And then, of course, like the investor we're working with right now, Elena got $9,500 in concessions, and their appraisal came back over contract value.
Yep.
So it's just it's a great time for investors to really get their foot in and try and navigate the market, build up assets right now because they have flexibility and power as buyers. And then, once the time comes to refinance, they're going to cash flow right away. And this one, they're going to cash flow.
Yeah.
And this is their second one in the last 4 months.
Yeah.
And they're going to cash flow right away with both.
The first one they cash flow too.
Yeah.
Yeah. I've helped a lot of investors. I'm an investor myself, right, with rental properties. And you look at rental properties as the long-term game, right? I've got one who specifically, I just had dinner with him this weekend, he and his wife. And he told me, he's like, I look at it as, because he's paying $200 out of pocket for the investment he just bought this year with me. And he goes, I look at it as I'm paying $2,400 this year to make $50,000 in equity in 2 years.
Yep.
So it's the rental game it's profitable, but you got to look at the long term. You lean on the short term as well, right? That makes a difference.
Yep.
Financially, it has to make sense for you if you can do $200 a month. But look at the long term then, because once that value goes up, then you can start leveraging those properties. Which this specific friend of mine, he does that. He buys, and then the value goes up. He pulls, leverages more, and that's how he accumulates all these properties. And it's kind of addicting, honestly.
Yeah.
Once you get enough properties, you figured out the game.
You see the appreciation start coming through, and you're like, this is amazing.
Yeah.
And that's the thing. It's really hard to cash flow right now because obviously we're in a higher interest rate market. But then, what we were discussing earlier, you have really high insurance premiums. And then you also have, some of the highest property taxes in the country in Texas. So right now it's hard to get into a property and be like, I'm going to cash flow right away. But it's definitely possible. And then also if you can stomach, maybe $100 swing or loss a month, I mean, you're going to see, let's say in 2 years, rates get into to fives or low 5, right? And then all of a sudden you're going to see these values skyrocket. Right. You can do, pull your cash out, buy another investment property. You can do renovations.
Yep. There's just a lot more options that you have once you have that leverage behind you. That all you had to do was invest and let it sit and somebody else pay that mortgage off.
Yep,
right?
exactly.
And obviously you have to be smart about it. You're not wanting to buy properties that you're going to have to dump money to a new HVAC system or a new roof, things like that. So you have to be strategic in some sense.
They got a new roof.
Yeah.
HVAC is like 4 years old.
Some other things. So you have to have some strategy behind it. But if I were an investor buying this market, which I did buy in this market, you want to buy low.
Yes.
And this is the market where you can buy low.
Yeah, this is, I know we discussed it last episode. where this is the sweet spot right now, where this is a buyer's market. I know we're talking about challenges and things that come up. That's always going to happen in this business.
Good things don't come easy.
Yeah, that's right. And unless you're like, there's almost always a challenge.
Yeah.
Regardless. And a lot of it, the buyer sellers don't even see. It's just kind of the backside stuff.
Yeah.
But yeah, this is that sweet spot where as a buyer, you have negotiating power. You have, whether it is credits coming in under list price, repairs, all that good stuff.
Yeah.
You have power right now.
So use it.
Use it.
All right. See you next episode.